traders at Axis Bank say bond investors are trading on a cautious note given the tight system liquidity. And for the T-bill side, the secondary market continues its bullish streak as offshore investors demand the on-the-run one-year OMO paper. Bosun Obembe, Treasury Team Lead at Axis Bank, joins me now for more market movements. Bosun, thanks a lot for joining us on the show today. Now, how tight is the rope right now when we're talking about liquidity at this point in time, and how long will this likely last? Talking about the cautious trading pattern we've seen from investors so far.
Thank you for having me, David. So in terms of the market liquidity, this week we don't have any significant inflow coming to the market, except the coupon payment that we expect on 2033 paper, which will come on Friday, and that is not substantial. But what market expects is probably like a CRR reform coming into the system, and given that we're expecting inflation figures by the end of the week, where the expectation is the inflation will trend upward again. So the tightening stance of the CBN will still continue. We expect this, but by next week, we have an NTB majority, and probably that will be FAC payment, which will improve this liquidity into the system.
Yeah, and let's also talk just a little bit as to how investors are also positioning across the yield curve now. We're looking at renewed interest on the 2031 bond, seeing trading levels at about 21.3%. The T-bills as well, now we are still seeing the 20th February 2025 paper, the 6th November paper, the most sought after. Walk us through how investors how they're positioning across the yield curve.
So when you on the TB side, what drives the market is the liquidity, and given that the market is still in repo, so yesterday it closed about 160 billion today. The liquidity position has worsened again. So market is a bit, the traders are a bit cautious as to what to pick and what to buy. But in terms of NTB auction, we have an NTB auction coming next week, which is what is driving the market sentiment. The last auction closed at 23%, and we have a substantial amount closing next week, over 600 billion maturing next week, which DMO is going to roll over. And also next week we have a bond auction coming up, 60 billion each of 2029 and 3031. So as a result, we see cautious trading, and investors are expecting that at the auction, both on the bond and the TB, the rate will likely inch upward. So I still expect that the traders and the investor will be cautious as to what they pick up, because we see expect that the rate to continue to trend higher, given the level at which inflation and the expectation of further increase.
Yes, and talking about the expectations of further increases, we are expecting the very last meeting of the Monetary Policy Committee this month, and looking at the inflation print as well. Now, for you, how do you see the MPC positioning in the fortnight on the back of this report, where we expect on Friday? And also, at the back of our minds, how are investors also digesting this move by the National Bureau of Statistics to rebase the country's GDP, and when we're also looking at the Consumer Price Index? How are investors digesting all of these moves in the build-up to the MPC meeting?
Also, the MPC meeting, everybody is expecting the MPC. They've shown leadership. At the last meeting, most of the analysts expected that the MPC will hold the rate. However, they took a strong position, and giving their expectation that we are not out of the wood yet in terms of the inflation, so they increase the rate. And given that we're going to see the full impact of the food regulation of the oil and the impact of the subsidy on the inflation figure coming by Friday, I think they might likely increase the rate again. Or if they don't increase it, probably they look at other parameters. It could be maybe CR, if they can touch the CRR, because CRR has a great impact at tightening the money supply, and the money supply is still very high. When you look at the numbers that came out for the last month, it was quite high. Both the currency, both the M1 and M2, we've seen an upward trend. So I think the MPC, they will most likely increase, and given that this is the last meeting, the next one will be next year. So they will have looked at the expectation that we are not out of the wood yet. So they will likely increase the rate or look at other parameters that will make them to the tightening stance will persist, and they will continue that.
And so far, we've also seen the accretion in our FX reserves. But the big question here is whether or not we can see a stronger Naira against the greenback, because we are seeing that depreciation still continue even into this week, trading at about 1,680 something at the official window. But we'll have to leave the conversation here for now, Bosun. Thank you so much for your time and the updates. That was Bosun Obembe, Treasury Team Lead at Access Bank.